Trading can be an exciting, yet challenging endeavor. Whether you're venturing into stocks, forex, commodities, or cryptocurrencies, the market offers significant opportunities and risks. As a beginner trader, it's crucial to take specific precautions to safeguard your investments and increase your chances of success. In this video, we'll explore essential tips and strategies that every novice trader should consider. So let's get started. 1. Educate yourself thoroughly. Before diving into trading, it's imperative to have a solid understanding of the market you are entering. This involves learning the basic concepts, terminologies, and trading strategies. Here are some steps to get started. Read books and articles. There are numerous books on trading that cover different aspects, from technical analysis to trading psychology. Take online courses. Platforms like Coursera, Udemy, and Khan Academy offer courses on trading and investing. Follow market news. Stay updated with financial news through websites like Bloomberg, CNBC, and Reuters. 2. Develop a trading plan. A trading plan is your roadmap to success. It should outline your trading goals, risk tolerance, and the strategies you plan to use. Key elements of a trading plan include goals. Define what you want to achieve with trading. Are you looking for short-term gains, long-term investment, or learning the market intricacies? Risk management. Determine how much of your capital you're willing to risk on a single trade. A common rule is not to risk more than 1 to 2% of your account on a single trade. Entry and exit strategies. Decide on the criteria for entering and exiting trades. This could be based on technical indicators, news events, or market conditions. 3. Start with a demo account. Before risking real money, practice with a demo account. Most trading platforms offer this feature, allowing you to trade with virtual money. This helps you understand the platform, get comfortable with the trading platform and its features. Test strategies. Experiment with different trading strategies to see what works best. Gain confidence. Build your trading skills and confidence without the fear of losing real money. 4. Risk management. Effective risk management is crucial to long-term success in trading. Here are some risk management strategies. Use stop-loss orders. A stop-loss order automatically closes a trade when it reaches a certain loss level, preventing further losses. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different assets to reduce risk. Position sizing. Adjust the size of your trades based on your risk tolerance and the volatility of the asset. 5. Keep emotions in check. Emotions can be a trader's worst enemy. Greed and fear can lead to irrational decisions and significant losses. To manage emotions, stick to your plan. Follow your trading plan strictly, regardless of market conditions. Take breaks. If you feel overwhelmed, step away from the screen. A clear mind makes better decisions. Stay disciplined. Discipline is key in trading. Avoid impulsive trades based on hunches or rumors. 6. Continuous learning and adaptation. The market is constantly changing, and what works today might not work tomorrow. Continuous learning and adaptation are essential. Review your trades. Regularly analyze your trades to understand what went right or wrong. Stay updated. Follow market trends, news, and developments that could affect your trades. Learn from others. Engage with trading communities, forums, and experienced traders to gain insights and learn new strategies. 7. Beware of scams and frauds. The trading world is rife with scams and fraudulent schemes. Be cautious. Research before investing. Thoroughly research any investment opportunity or trading platform. Avoid get-rich-quick schemes. If it sounds too good to be true, it probably is. Legitimacy. Trading requires effort and time. Use reputable brokers. Ensure your broker is reputable and regulated by a recognized authority. 8. Start small. When you're ready to start trading with real money, begin with a small amount. This minimizes potential losses and allows you to gain experience without significant financial risk. As you become more confident and skilled, you can gradually increase your investment. Now to conclude, trading can be rewarding, but it requires knowledge, discipline, and a strategic approach. By educating yourself, developing a solid trading plan, managing risks, keeping emotions in check, continuously learning, and being cautious of scams, you can navigate the trading landscape more safely and effectively. Remember, success in trading doesn't come overnight. It's a journey that requires patience and perseverance. Happy trading!